Good Sunday morning, traders. This is Sam the Trading Geek with your Sunday, December 14th, 2025 market review and preview video. Hope you're having a great weekend. And we're going to take a look at what happened last week, last month, last quarter, and year to date on some of the major markets and other different factors. So let's get started. This is Friday's action, and really the only significant green thing was the VIX, which was not up that much, given how poorly tech performed on Friday, up barely 6%. Gold was up about 0.5%, and the dollar went up also with gold, which is kind of counterintuitive, up 0.14%. But the Qs, tech laden, down almost 2%. Bitcoin losing 1.69%. Just kind of becoming an indicator for risk on, watching the Bitcoin prices. Small caps, after hitting an all-time high on Thursday, given back 1.5%, as did the microcaps, and the mid-caps down 1.3%. Vanguard total market index down 1%. So it was generally a down 1% day. Nothing, not much escaped the market. But taking a look at the week, and we can see the Magnificent Seven lost a little bit over 2%. The Qs just about 2%. Something that's becoming a little worrisome are the yields rising, and which means their bonds are down. TLT on the week losing about 94 basis points by down about 0.5%. And at the top of the leaderboard for the week is gold, up to 2.34%. And the microcaps still attacking on 2.3%. The VIX up a mere 2% on the week. Big deal. IWM 1.23%. So kind of a mixed bag on the week as far as major markets are concerned. Looking at, the month to date, which is really only 2 trading weeks in, we've got the microcaps leading the way, up 5.88%. And Bitcoin, believe it or not, is up on the month 5%, but it really has to get in gear in order to support a kind of a risk-on market. And we are in triple witching options expiration week this week. Small caps up 3.35% on the month, and the Dow showing some strength as the rally broadens out, up 2.5%. So VIX is still down 8% on the month. TLT losing about 1.61%. But TLT, these are the 20-year bonds, have been in a range going back, about 3 years now. They've gone basically nowhere. So we'll see after this long consolidation which way they go. My guess is bonds go lower, but we may have a bit more left in this corrective rally into the first or second quarter of next year. Dollars lost about 89 basis points, and we can see that a lot of middling action on a month-to-date basis. Certainly, Santa Claus does not look like he's here just yet. Not that he's not that he's expected much before the week of Christmas. Looking at major markets on a quarter-to-date basis, gold, look at that, up 11.3%. Nothing's touching it. But microcaps is coming close, almost 10%. Small caps up 4.9%. I'm not sure I understand the strength in the microcaps versus the small caps, but that's definitely a risk-on part of the market. Dow up 4.67%, mid caps up 2.3%, and then total market index, the Vanguard, up 2.38%, with seeing Bitcoin down in its own bear market about 21.38%. And they say that Bitcoin tends to have drawdowns of 75 to 80%. So we could be in this post Bitcoin halving drawdown period for a while. We'll see if that comes to being, given that this cycle is different than past cycles when you take into account how many more ETFs there are. that there's options on Bitcoin and what have you, and that tends to generate a little bit of support when shorts have to cover. VIX down 3%, TLT up down 2%, and Magnificent Seven just up about 2% on the quarter to date. And we do have what 2 weeks, 2 full weeks of trading left in the year, 2.5 weeks. So we'll see if we can get more green on this screen for the quarter. Year to date, nothing touches gold, 64%. I don't have silver in here, so I'm not sure if that one even comes close, but that one's been on a tear. Maybe it is higher. I've got to look at that. IWC, microcaps up 25%, Magnificent Seven. Mostly the strength we'll see in a second of Google, 21.5%, and the Q's up 20%. At the bottom, VIX down about 9% year to date, dollar losing about 5%. And in currency terms, that tends to be quite a move, as we've seen. Bitcoin down almost 5% on the year, but surprisingly, TLT is basically flat on the year. A penny difference between the start and the ending point, but keeping in mind that this pays about a 3.8% dividend, maybe closer to 4. HYG, high yield bonds up 2%. And we can see Mag 7 is up 21%, 21.5% year to date. The Q's, as I said, 20%. So everything except Bitcoin, from a risk-on standpoint, is up on the year, which is good. So, and we only have a few weeks to go. Taking a look at the sectors on Friday, mixed bag. Of course, XLK Tech was the worst, with metals and mining, despite a bit of the strength in gold that we saw, 0.5% up. Telecommunication stocks 2.6%, and retailer stocks losing about 1%, as did energy. And as you might expect on a risk-off day, the staples were up 0.8 of a basis point, and we just can't seem to recapture that 80 level in the XLP so far. But I think staples are undervalued and will take a leading role in 2026, especially if we do get a recession in 2026, which is looking more likely than not. Consumer discretionary up 0.4%. Again, on a risk-off day, to have consumer discretionary, and that's mostly Tesla was holding up pretty well on Friday. XLV and the healthcare up 0.3%. So Friday, mixed bag. And when you look at the breadth, then it was literally 50 up, 50 down. In some areas, it was 60-40, but for the most part, it was not a bad day unless you're mostly concentrated in tech and the data center play stocks. Looking at the week, we see metals and mining up 2.4%, as were materials and financials showing quite a bit of strength. I think they also made an all-time high, helping the Dow rally up quite a bit since it has a few of the financials in there. XLK, the worst, down 2%. XLU down 1%. So we got to see those utilities find their footing, because they tend to kind of give a leading indication on where the market's heading. If utilities, believe it or not, are really weak, it kind of signals things aren't so good under the surface. And granted that a lot of this is interest rate related. Energy down 89 basis points, and flat in there was the telecommunications. So kind of a mixed week for the from a sector standpoint. Month to date, also mixed, a lot of green here. Metals and mining top. Transports, which have been really, really hot, up 4.86%. Have you seen the price of FedEx lately? XLF, 3.9%. And at the bottom, utilities, on a month-to-date basis, down 3.23%. On a quarterly to year to date, healthcare is in the lead, just edging out the metals and mining and the transports. We have at the bottom of the list real estate now turning red on the quarter, and utilities down 1.79%. Communications, this is mostly Meta dragging it down 1.54%. So mixed bag on a month-to-date base, on a quarter-to-date basis, but for the most part, the majority are in the green. So it wouldn't take much to flip this over, especially if Meta decides to rally into year end. On a year-to-date basis, everything is positive, though the real estate is just barely eking out something in the green, as are the consumer staple stocks up 1%. Metals and mining, look at that, 80%. Nothing even comes close. You've got the IYZ telecommunication stocks, XLK 23.59%, and communication stocks up 20%. So lots of green year to date. Like to see that. And we'll skip over the industries for this report and flip over to the Mag 7 and take a look here. For the week, Meta giving back a lot of the gains it saw over the past week, down 4%. And NVIDIA can't shake the 180 level, up down 4%. And Google finally coming off its perch, down 3.59%. The only Mag 7 stock, surprisingly, that had any gain last week was Tesla, up 0.87%, showing some resiliency despite lowered car deliveries for the month, last month, in terms of US or domestic deliveries. Looking at the quarter to date, 4 up, 3 down, and the worst of them being Meta, down 12%, and Microsoft losing 7.61%. But that one's had a pretty good run, as has NVIDIA. So the big winner, as we mentioned earlier, is 27.5%. That's Google, Apple up 9%, and then Tesla and Amazon up a mere 3%. So the only one that's really outperforming the S&P is Google, and the rest of them are all underperforming when you consider that the S&Ps are up about 15, 16, 17%, was it? In any case, on a year-to-date, actually, I should compare year-to-date basis. So scratch what I just said. I thought I was looking at year-to-date. So if you consider that the market is up 17% S&Ps, then only 2 of the Mag 7 are outperforming NVIDIA and Google. And hate to think where the S&Ps would be, given that tech is about 36% of the S&P right now in terms of the cap weighting. The rest of them are all underperforming the S&Ps, Tesla and Microsoft in the double digits, Apple, with Amazon bringing up the rear. And, if Google is any indication, and we have kind of a repeat with Amazon, Amazon is due to have a really good year in 2026, assuming we avoid or have a mild recession. So those are the main sectors and markets that I wanted to cover with you. So let's flip over and take a look at my typical chart review with the SPX, the NDX, and the RUT. So you see my tri-pane is daily, weekly, monthly. Looking at the daily, we still have a bullish chandelier stop and bullish parabolic stop and reverse. Again, another volatility stop. You can see that the MACD is solidly positive, but the fast line is flipping down a little bit. We didn't get to the overbought level on a daily basis. We barely got above the 60, and we're heading back down to the neutral 50 level on the relative strength index. You can see here in the faint gray, the options implied expected move down here, and the options implied expected move, this is for last week, up here. So we're like into 11 days of sideways action with no touch of the upper or lower edge of the expected move this week and last week. So that's pretty rare that we don't even get up there. But that's what we're doing. We're kind of consolidating, and we did not make a new all-time high. We came about 17 points shy on Thursday of making a new all-time high. This 69.20 back here. So a little weakness on Friday, but finding its footing here at the 21 EMA, this green line. And then you do have this red dot being a parabolic stop and reverse. We don't want to take that out on a closing basis and shift the momentum back to a little bit bearish on the daily time frame. Looking at the weekly, we were hoping that we would take out this parabolic stop and reverse dot right up here at 69.09. We didn't quite do that. We needed to close above there. But so the PSAR is bearish on a weekly basis. Chandelier stop still positive. And you can see here, we're just going sideways. We never stopped one time framing here on the weekly. We didn't take out last week's low on the weekly time frame, and so that's a good thing. And we can see that the MACD was trying to flip positive again, the blue fast line over the signal line, and we still have an RSI that is not quite back to overbought yet, the 70 level. Looking at the monthly, you can see here that we have a little bit of a topping tail there. We got as high as 69.03, but the month is still young, and we are still one time framing. Well, I should say that because this took out the prior month's low, right? 65.21. Yeah, we did take it out by about 29 points. So we did stop one time framing here when we haven't resumed it, but we have the fast line of the MACD over the signal line significantly. We're still overbought on a monthly basis. We're not even close to breaching that 70 level. And you want what is overbought to stay overbought. And by the way, just so you know, on my charts, red is the 200, purple is the 100, blue is the 50-day, and green is the 21 EMA, and this is just the upper Bollinger Band, I think. No, that's the 10 EMA. Sorry about that. I don't have the Bollinger Band on the monthly time frame. I have it on the daily time frame. So SPX still looks bullish. A little bit of a spin out on Friday. We'll see if we have any follow through. Again, the tech weighting in SPX is going to have a heavy influence on the SPX. So looking at the daily on the NDX, we just see that the PSAR just turned bearish on the daily time frame. So looks like we were consolidating up here, but we did take out Thursday's low and closed right there. And but we didn't take out the options implied expected move. We hit it. We basically pierced it and came right back in and closed right above it. MACD is trying to flip back negative, and we have the RSI in the neutral zone. So again, we're back to where we were around October 25th. So we've made no progress. Here's a candle we started with on October 24th. We went as high 26,182, and here we are back at the 25,196 level. We still have a bullish chandelier, but that's right here. So closing under the 25,080 level will break that chandelier stop, which is a volatility stop of sorts. On the weekly time frame, we've got the bullish chandelier, bullish PSAR, and we did flip the PSAR bullish, so that's a good thing on the weekly. MACD tried to flip up positive again, couldn't do it. basically after the FOMC meeting. There was a little bit of joy, or that's weekly. There's the daily. Yeah, the joy was right there on the 10th, and Thursday they tried to push it down, but came right back up. And this is yeah, this blue line is the 8 EMA, by the way. Too many EMAs, right? And why is it yellow here? That's what happens when I change the colors in Thinkorswim. In any case, still looking mighty positive on the weekly time frame, but we're at the 60 level and never got overbought, never quite got to the 70 level again on this rally here. But plenty of time on the clock as far as the year is concerned. On the monthly basis, you can see it's bullish. This is a topping tail on the monthly, but again, the month is still young. MACD solidly positive, and the RSI still in the overbought level at 73. My guess is that if it comes to the 70 level, it's going to bounce, and we are heading into a seasonally positive part of the month, although options expiration week in December can be a mixed bag. It tends to lean bullish, but again, we have not been following seasonality to any great extent this year, so I don't see why December would have to either. A little disappointing on Friday to see, the Russell kind of acting like a tech stock. So after making a new all-time high on Friday, we got a reversal candle, and it basically, you could call this a bearish engulfing candle. It looked like we were closing above the options implied expected move, but no, we came back inside, and MACD is still solidly positive. We never got to the 70 level. I mean, we got to about 68. We never got to the overbought level, and that's not a great sign. But I mean, look at this rally from the bottom. Not a lot of consolidation except for this few days here. But we did take out Thursday's low. And again, with that bearish engulfing, that's a little bit concerning to see it give up so much in light of the weakness coming from the tech sector. Looking at the weekly chart, MACD flipped positive. We've got still a bullish chandelier, bullish PSAR. And again, we closed inside the implied move. On the monthly chart, you can see here that the MACD is positive. We're not quite to the overbought level on the weekly. We need to see that for some persistent strength in the small caps here. And candle looks good here, a little bit of a topping tail, but on the monthly basis, the Russell 2000 is looking a lot better, and certainly better than the NASDAQ over the last, or at least December year to date. This looks a lot like the NASDAQ candle for last month, but a great improvement. We made a new all-time high here, whereas we did not do that on the NDX or the SPX last week. So a good sign. I usually don't look at it, but the DIA also made a new all-time high. That's the Dow Jones Industrial Average, the ETF for the Dow Jones. So looking a lot like the small caps on Friday, but not as solid of a red candle as the small caps. Also closing inside the expected move, and you've got definitely a bullish formation on the monthly, solidly solid MACD, and we are at the 70 level on the Dow. Flipping gears a little bit and taking a look and talking about the VIX. As I mentioned, the VIX was up a mere 6% on Friday, and you can see this big topping tail on the daily. MACD didn't even make an attempt to flip up even after the weekday that we had on a monthly basis. We're just downtrending as we are on the daily basis, and I don't really care about the monthly, but this is a good sign for the bulls to see the VIX not showing a lot of strength, and I wouldn't expect to see a lot of strength through the year end. Looking at the VVIX, which is the volatility of the volatility, again, this spiked up all the way up to the 106 level almost, and came right back down, closing below the all-important 100 level. So that's a good thing for the bulls. And you can see here a topping tail on the week for the VVIX. Speaking of the VIX, let's take a look at what the option pricing is looking like. We have a VIX futures contract that expires on Wednesday morning, and which means that we have a VIX monthly series expiring on Tuesday. So we can take a look here. 1574, let's call it 16. And so we go out $1, it's about 57 cents, and go out to the 15s, about 7 cents. But more important, let's go out to the next monthly expiration, which is January 21st. So the 16 level has us looking at the 17. So these are pricing out at about $2.53. And if we go to the 15s, you can see that these are pricing out at 21 cents. So yeah, the calls still have a strong premium over the puts, which puts a feather in the bears camp that there might be some further consolidations or sideways to down action to kind of work this off, because certainly the VIX options are telling you that they're more bullish on the calls than puts, and therefore there could be a little bit more give back in the following week, which is coming up this week. But given that it is a triple witching expiration, you just don't know. There's just so many cross currents going on this week that you're going to see a weird action, especially since we're approaching year end. Looking at the VIX contracts, and what we want to look here for is contango or backwardation. Contango just means that risk rises as you go out further in the contract spectrum, and that is absolutely the case because we have 18, 19, 20, 21. Farther you go out, the higher the VIX contract, and that's a good thing. It just means that there's no front-loaded risk here and now, and the 16.7 is the futures value for Wednesday morning. We're at 15.74% on the spot VIX. So this says that we have a little catching up to do by Wednesday, one way or another. Either VIX comes up to the 1670 or the 1670 comes up closer to the VIX. My guess is that we still have a little bit of digestion or sideways to down for a couple of days. Maybe that brings the SPX. Yeah, we're at the 21. I mean, could we get to the 50-day? Yeah, I mean, it's right over here, 67, 61. So it's not that 50 points, a little bit over 50 points gets you there, and it is let's take a look here. 67, 61 is definitely within the options implied expected move for the week. Yeah, I mean, we are at 67.19, so certainly we could get there this week. Taking a look this week at the OPEX week expected move, and we look to the PM expiration on the 19th, Friday. About 108 points, okay, compared to about 100 last week. So not much more. Again, I think a lot of things are going to be shaped by the positioning and the rolling that's happening for options expiration. Though there can be some window dressing, there can be some profit taking, and there could be some still remaining tax loss selling until the end of the week. So I got a feeling that this is going to be a weird week, and not one that you want to have too much conviction in and not take too serious of a position. If I were doing any swing trades, I would be waiting till Thursday, perhaps Friday, before putting anything on, because there can be a lot of pin strike or pinning action on the options into month end. Speaking of the expected move, let's see what we have here for next week in terms of economic reports. We're starting to catch up on a lot of stuff. You can see Monday starts out with Empire State Manufacturing, and we have home builder confidence, and we have the Fed heads starting to parade back out now that the quiet period is over. Tuesday, we have an employment report for November coming out at 8:30. So that is market moving, employment rate, wages. So this is like a traditional Friday. Retail sales. So these are red star events. So they could definitely have an effect on the market. On Wednesday, no real economic reports scheduled, except that we have some Fed heads yakking it out up there. Thursday, our typical jobless claims, but we also have CPI for November scheduled on December 18th. So that's another red star event that could move the markets. Philly Fed as well. So all pre-market. Friday, we have existing home sales and consumer sentiment. So with the exception of Wednesday and Monday, we have 3 days with heavy economic reports that could shake things up. And believe me, $108 move, we could see that in a day, and we have, given what we saw on Friday. Taking a look at remaining earnings for this season as we wind things down, nothing of importance on Monday or Tuesday, but Wednesday, circuit or semiconductor maker Jabil Circuits, which had a torrid run recently. Micron, also another torrid run with a little bit of lucky charms there for General Mills, Toro. So those are the main one. Thursday, before the open, Accenture will be a good indication of projects that they're doing. And FactSet, Darden Restaurants, and CarMax reporting in the morning, and then the afternoon, the big swoosh, Nike and FedEx. Be interesting to hear what they have to say about shipping and tariffs and what have you. KB Home as well. So Friday, ConAgra Foods and Carnival Cruise Lines reporting along with Paychex, and whatever happened to Winnebago. So in any case, it's an options expiration, triple witching, where we have the expiration of futures options, and index and stock options. So it's not a quadruple witching. There's no more single stock futures. So it is triple witching, and you're going to see a lot of cross currents in the market. This is an environment where you want to take your profits quickly before the market takes them for you. Don't get married to one positions. Definitely stick to your stops on these, because things can get out of hand very quickly. And I've seen, even in my own account, where positions were very small, and just one bad down day, stock is down $9-10, and you're giving up, a week's worth of profits in just a day. It's just been a very volatile market, and you have to be extra careful. A lot of fake outs during this options expiration, especially triple witching. So wait till Thursday afternoon or even Friday if you want to position and stuff for next coming weeks, given there might be some strike pinning and what have you. So market overall bullish. The bears have the bulls have the benefit of the doubt, but in the short term, in the next few days, I think we're going to see a lot of cross currents, and I think that we could see a test of the 50 days. So be careful out there. I appreciate you watching, listening. Welcome your feedback. Give me a like, and I will see you next time with next week's video. Take care and have a great trading week. Bye-bye.